So I just want to make another video here since I lost the other one. Show you how I go about picking which options on the options drawdown. This here is my options setup, and normally first thing in the morning I'll go up here to the box here, and you want to has all these tabs. You'll go to the options tab, and this is QQQ chart, so I'll dial in QQQ, and you'll see it'll have a drop down here. These are the strike prices. Basically, the strike price is the price QQQ is now. So this QQQ is 437, 68, which they usually go by whole numbers on the strike. So 437s and 438. Where it's purple is in the money. These would be the puts, in the money puts, and in the money calls. So typically when I'm picking out options, I'll just either get one that's in the money. Say I want to get puts, I'd get the 438s. Or if I want it to be a little bit cheaper, I'll maybe go one or two out of the money. You see these here are pretty cheap since it's expired. Talking about expirations, if you collapse all these levels, these are expirations. This is 0 days. It means it's today's expiration. It ends at 5 o'clock. Market close. 1 day would be tomorrow's. 2 days would be the following day. Typically when I'm day trading, I'll usually just use the 0 day expiration. Maybe next day if it's the end of the day. But typically I'm just using the same day expirations. And if I want to see more strike prices, you can go up here and say you want to see 5 on each side. Give it 10. Usually though, what I'd usually only in and out of the money, usually 1 or 2, so 6, 4, 6 is great. So usually I'll go over here to QQQ and see where I want to reject possibly. Say it's in here pre-market, and I'm looking for maybe a reject around to the high at 438.21. I would come over here and probably this 438.21s, 438s would probably be close enough. So I'd dial those up. Then I'd go over and possibly see where it could bounce. For example, we could say, okay, today's low could be a good bounce level support area, 435.50s. So then I go down to here to where my calls are, and the calls will be on this side. So 435.50s. Okay, so 435s would be over here. Be quite a bit out of the money there. So I might say, okay, let's just do 436s. That'll be close enough for my calls, and I'll have those dialed up first thing in the morning. Then I'll watch it. You know, if it gets here, I'm wanting to see some sort of volume confirmation along with a candlestick pattern. Let me go back to yesterday's price action. Maybe I can find something here. Okay, here's a pretty good one here. Been a great call entry. Got down here 436.39, made this big doji star. You can see it came down and wicked up. You want to see big wick on the bottom and small body. It's a reversal pattern here, big down bar, wick up, and typically I would look at that, and I'm looking down here at volume. See how high that volume is compared to all this other stuff? Had it like even this sell-off here had this volume. This volume's like 400 or 500% more. That's a lot of volume. You know, okay, buyers must have stepped in here. So once that candle closes, it closed here. I'd probably dial in my calls, go ahead and get an order. And here I have a ATM bracket order. This one here is set for 115, which would be 15% stop loss, and target 100%. Which I typically don't let them go to 100%, but usually my first trim, I'll trim around 25%, 30%, just depends on price action, let the rest go for a little bit. So I'll get in them. Usually you'd want your stop below here, so say 15% stop loss would be here. I'd probably just go ahead and move it down just to put it where it's underneath that structure. And then VWAP would have been here, you know, say 25, 30%. was coming up in here. I'd probably go ahead and trim before it hit VWAP, just in case it would hit VWAP like it did here and come back down. That'd be a good place for a first trim. Some people might want to trim up here at the 21 EMA and take the rest of it out here, or 3/4 position. Just kind of however you want to manage that risk. Let's see. The other thing you can do is the order entry, you have to put it in manually. So typically I'll go over here, say I buy these at, let's just go see what this did. 1143. Which would have been this 5-minute candle. So it would have been on this candle here. So you could have got them for about $1.15. Probably in here about $1.18. So I go over here on my iMac, I just double click. It might be a left click on Windows. Do the edit, come up here to where it says price, and put $1.16 in, enter. This is for your ratio. If you want your first target here to be 2-to-1, 3-to-1, 4-to-1, you can adjust it here. For this, I'll just do 2-to-1, so that'd be a 30% at the first target. And you just hit apply, and it'll automatically $1.16 put your first, second, and third targets. Then I can go on here and use my trend line tool to show you. Okay, you can see that's about 30% to target 1, 60% to 2, and almost 90% to target 3. So let's just go back here to that trade. It's right here, 1143. We got in here to $1.15. Just see if it made. Okay. 30%, that'd been your first target there. Ultimately, win 45%. So it would have hit your first target. Let's see if I can find another example here. Typically, I'm watching the 1 minute chart, 1 minute, sometimes 2 minutes for reversal patterns. That one there looks okay. Not as much volume as I would like, but it's a nice doji star after 2 big bullish candles. Let's go to yesterday's trade maybe. One I did take. Let's see. I don't remember which one it was. Okay, right here. Okay, so this was a 61.8 level, somewhere right in here, 436.50. Came down there. I thought about it here, but as you can see, the volume didn't really show me anything on the volume. It was pretty high coming down. When it made this candle here, it was just about average, and it's not really a very good reversal pattern. So I didn't really want to take that. Could have made a little bit, but I wanted a little bit more confirmation. So when it came back down here, basically doubled, pushed this big bullish candle up with this wick with the extra volume here. I went ahead and waited. Since it pushed up so much, I wanted my stop loss below here, so I waited a little bit for it to pull back, got in here, and stop loss was below here. And then I trimmed one top of this candle, or half the position top of this candle. I wasn't real confident in it. I probably should have just let it run. Trimmed half the position here, and then got all out here for 30%, 25% might have been on the VWAP. As you see, it would have gone, I think, about 75% if I remember right, total. But of course, you never get the whole run. But those are just two examples of what I look for. I'd like to find a good put trade. And basically calls You may know this already, but calls are for if you want the equity to go long, you would buy calls. If you think it's going to short, fall away, you want to buy puts. Let's go to alright, get off there. Don't really see anything for puts, honestly. Here's one that'd been a great call entry. End of the day. This evening I didn't see that. 435, it wicked down below today's low, basically liquidated. Pushed that big bullish candle up again on big volumes, about twice of what this stuff was. So that would have been a great entry. You could have got in here. 15% stop. Probably wouldn't have got you here, but with that big a candle, I would probably felt safe back in here. And that went ahead and pushed. Let's see what those did. Style up. 435s. That would have been 1300. And this candle here got back in here. Alright, where's my tools? Let's do it this way then. Huh? Come on. That's a crazy thing. Alright, so you got in here at $1.03. That ultimately went up 185%. That's a pretty good run. A lot of times at the end of the day, the premiums have fallen off so much that if it gets a good momentum push, premiums will just skyrocket quick, especially on a 0-day expiration. Like just in this small push, you could have done 50%, and I probably would have been, you know, most of it I probably would have got out. That's probably about VWAP. But ultimately, you could have, you know, let it 100%, almost 200% there. So let's see. Anything else? I think that's basically it. But yeah, basically what I look for is just reversal patterns, bounces, rejects on options. I don't typically like to do breakouts with options. It's just not my thing. If I'm going to do breakout, I'll do it on futures. But hopefully this helps kind of give you an idea of how to find the different options, how to read the options chart. Here, you know, you can just, this will be the ask sides, bid sides, of course. If you have an order, bracket order in, you'll see them, you know, in the order section. Have the profit and loss open, so when you're in a position, you can see what your profit and loss is. But yeah, that's basically it. I may do a little more detailed video on options later on, more in depth on what options are and different, you know, option strategies that you can actually buy multiple options, and it's called a spread, where you can buy like a call and a put, or 2 calls and a put, and do what they would call like a straddle or a butterfly. Different. It's more complicated, but basically all I do is just buy a put or buy a call and sell them. And really, the only money you're risking this way is only the money you put in. You know, say you go one contract and your entry is $1.16, which that's one thing I should mention is this is $1.16 per contract, and each contract is combined of 100 shares. So, or I should say, this is $1.16 per share, and you need 100 shares per contract. So if you buy one contract, this will be $116. Or if it was, $1.50 you bought it at, then it would be $150. And basically that amount you buy the contract for is the only money you're going to lose. Say you buy 0-day expiration, it expires tonight at 5 o'clock, and you haven't sold this, then it would expire worthless. And you'd lose that. If you got it in $1.16, it'd be $116 you would lose. And say you bought, say you bought 3-day expiration and calls. You let this go for 3 days and haven't sold it, and it went against you, it would expire worthless. So yeah, I think that does it. Hopefully this helps.